So moving on, ladies and gentlemen, we now have another keynote session on trade credit dynamics. And to deliver this keynote, may I request Mr. Subir Das, who's the Executive Director at the Export Credit Guarantee Corporation of India, to please join us on stage.
Good evening, ladies and gentlemen. Thank you very much. Thank you to all of you for having me here, particularly Dun & Bradstreet, for having organized this wonderful summit. I think it will be a kind of a endeavor which in a long way will go on encouraging and motivating people who are sitting on the sidelines of jumping into this fintech bandwagon. Already India is leading the cart, and I think many more people will be interested, seeing the potential. I think I must congratulate Dr. Singh having given us such an insightful delivery. I think it's an eye-opener for us that what wonder it can do for the Indian economy, that fintech endeavor, whatever has been made so far. And we can make a lot of progress in this domain because the ecosystem is available with us. Now, having said that, I will just jump into the topic given to me. I was initially confused what is to be talked about this dynamics. This trade credit dynamics is such a broad and general kind of thing. Trade, then credit is involved, and then other aspects of the trade credit is that insurance, trade credit insurance, everything is involved. It's a very broad kind of thing. So mainly I will focus on the export side of the trade, that is foreign trade, because that is the domain I have been associated with for more than 2 or 3 decades. So I will be focusing on that. Before coming to that, I would say, what is the interconnection between trade and trade credit? I would say rather export and export credit. So even if I take the example of trade or export, whatever it is, as Dr. Singh has shown us, that this has been thriving for, say, 500, 600 centuries. This finance trade credit part, or the consumer credit, or whatever you say. But more importantly, I would say, trade is like 1,000 year or 2,000 year. It's I think, synonymous to the economy or civilization of humankind. Right from the onset of the civilization, this trade is happening, cross-border trade is happening all across the globe. And India was a leading light in that. If I take I won't say prehistoric, even 2,000 or 3,000 years back, when Indian merchants were going all across the globe, and India was the biggest player in the shipping industry. And India along with China, these are the 2 pillars of global economy, I would say, in terms of foreign trade. And therefrom, we started the journey and come to this level. The modern India, again poised to take a big leap as far as the economic size is concerned. He talked about this Amrit Kal and size of the economy probably will be very soon the world's 3rd largest economy, and thereafter we can launch for the bigger things. With regard to trade, I would say the trade has been all through subjected to a series of incessant disruption. If I take about last 3 decades, we have seen disruption in the form of war, in the form of global financial crisis, in the form of economic turmoil, in the form of pandemic, even maritime route disruption, what we are seeing today. Similarly, the fate of trade is very much associated with the trade credit. Well, I would say trade credit finance as well as trade credit insurance. So it has been going through this kind of disruptions, but trade all along, it has come back, overcome, and at times surpassed the expectation of the global economists that trade will suffer a major setback and it will decline. It has not happened. It has been thriving all through the centuries, thanks to the commitment of the stakeholders. Now, if I talk about India's ecosystem about trade finance, I would say the entire ecosystem is largely dominated by the scheduled banks. If you take the export credit as a whole, it is dominated by the scheduled banks. But if I see in terms of the trade finance gap, see globally, if you take trade figure, it is something around, Dr. Singh may correct me, around 23 to 25 trillion global trade. Out of that, 80% is supported by the trade finance. Now, from that perspective, even till the year 2022, the trade finance gap globally was in the tune of 2 to 3 trillion. I mean, that is a very rough estimate. That's a humongous trade finance gap. I mean, how that can be the kind of a driver for change is a biggest challenge for every economy. Now, in this gap, the maximum sufferer has been the underserved people, underserved entities rather, is the MSMEs. The same thing is the story in India. The trade credit is predominantly dominated by the scheduled banks, and again it is typically similar to what you have seen in the corporate bond scenario. Most of the credit is cornered by the so-called top-notch accounts, corporates, and hardly anything is left for the MSMEs. And that is affecting the economy, that is affecting the trade, and it is suffering the entire population in a sense in terms of whatever problems you are seeing, job crisis, or in terms of the value addition in the industry, because our larger share of the entities are stuffed of this kind of finance. So the institutes like ECGC, scheduled banks, and the insurers and the stakeholders are contributing to that extent that we can stimulate this credit. And the flow of adequate credit to this segment, particularly MSME segment, how it can be strengthened, that is the biggest challenge, what we are seeing. If I can share some thoughts about this, the direction of the trade credit happening in India, if I take the example of scheduled banks, the disbursement since last 5 years, total credit, export credit disbursement, till 2021-22, there was a decline for year-on-year basis for last 3 years. There may be reason, pandemic is there, even pre-pandemic there was a decline, because banks became risk averse. Because of the situation at the bank's balance sheet was not good 3-4 years back. There was twin balance sheet crisis. Since then, though we have covered a lot of ground, if I take last 2 years figure, though there is marginal growth, even this year, it is not picked up to the level of desired extent. Now, what is the solution? Solution is there, visible, like democratization of the credit, what Dr. Singh has told. These fintechs can fill. There are NBFCs, there are other players, there are other documents, other instruments in terms of typical bank lending, other forms of lending, in terms of platform-driven support to the credit financing. Now, what is exactly happening here? We have the ecosystem. Now, we lack the synergy, we lack the integration. That is the problem. Now, if I take how trade has changed, I will give a simple example. For centuries, the bill of lading, the transport documentation, is the center of export documentation. Now, if I take a physical bill of lading, traditionally, the users are exporters, that is supplier, buyers, carriers, freight forwarders, authorities like customs, banks. So 5, 6, 7 users of bill of ladings are there in a particular transaction. Now, if 5 or 6 players are dealing with this transaction, or stakeholders are dealing with these transactions, if it is done physically, it takes, if I take that documents are sent by courier, it takes days and months. for the handling purpose, pure handling purpose of this document. Then you talk about negotiation, you talk about financing, and all these aspects will have their own costs and time. Now, move over to this current scenario. What is developing is the digitization of this export documentation. Now, the same bill of lading can be digitized. And all these interconnected people can be brought into a platform, blockchain-driven platform. And what is taking days or weeks, can be done in few hours, 2 hours. And it will ensure transparency, it will ensure security, it will ensure speed, it will ensure reduction of cost. And more importantly, this can happen based on consensus. You can avoid the interference of the central authority also in a very secure and transparent manner. So, easier said than done. The infra is there, or people are participating in that. But the problem is, again, I would say, as he has pointed out, data standardization, file format standardization, universal protocol in terms of international trade. So these are the areas where we need to focus. Similarly, if this is adopted, trade finance can be easily linked to this. And that's why we are seeing so many platforms like trades, or even for the export domain, you have platforms which are coming into this domain. And so far, I think they are making good progress. I think I was just checking before coming to this session. I think till 23 or 23, the transaction, trade transaction, these platforms are handling to the tune of lakhs, 2-3 lakhs transactions. And the volume of transaction is in the tune of 6 to 8 billion. So that's a good progress, I would say. But it is not good enough. When you are talking about exports of several billions, 700 billion, service and merchandise taken together, and you are talking about 2 trillion by 2030, this is not enough. This is not enough. Even bank finance to the tune of 7-8 lakh crore or 10 lakh crore is not good enough to support this kind of goal or this kind of expectation that the trade will be, because I have told in the beginning that trade is supported by trade requirement of support is to the extent of 70 to 80%. So we were nowhere near even in India. So taking that into account, the innovations, the dynamism that is required will be fulfilled provided all stakeholders are participating in a wholehearted manner. So government from its side are making all sorts of efforts, providing the infra, providing the ecosystem for digitalization of the finance, digitalization of the trade, digitalization of the documentation, At the same time, the institution like fintech companies, banks, insurer, NBFCs will have to participate in a wholehearted manner so that the gap in the trade finances can be minimized to the extent possible. There will be gap because it is not one way, because the entities, particularly the MSMEs, will have to gear up, participate in this bandwagon, because you know the challenge of credit primarily with the weakness associated with the MSMEs. I don't want to elaborate upon that. Why banks are not giving credit, why NBFCs are not giving credit, why even the fintechs are not very keen about the business loans in this domain of MSMEs. There are weaknesses, inherent weaknesses with the MSMEs with regard to their capacity. So that is being stimulated by the government, how MSMEs can be provided the right kind of wherewithal to get themselves acquainted with the changes in the ecosystem and to avail themselves of the benefits that is available of the increased digitalization of the economy, increased digitalization of the trade finance domain. With this, I want to stop here. Our hope is that this environment of change will gather the steam and gather the traction in a way that we are making huge leaps so that these trade finance gaps can be minimized in coming decades. Thank you very much.